What's up, everyone? It's Karthik with MoneyVest. So markets here rallying very nicely. A nice little rebound here in the markets. NASDAQ up over 1%. The S&P also pushing higher, up over 1%. And the Dow Jones up almost 500 points on the day. So is this the beginning of a new rally, or is this a bull trap or a dead cat rebound or a dead cat bounce that we need to avoid? All of that is going to be discussed in this video. We've got lots to unpack. We got a big debate between Harris and Trump tomorrow. Google coming under a lot of pressure with the DOJ investigation. Palantir up over 14% by the time it closed after the announcement of its S&P 500 inclusion. Apple with the new product launches. However, they don't really seem new, but I'll give credit to Apple. Very nice updates with new products here, as well as inflation on deck for later this week. So we got lots to unpack in this market update. Make sure that you drop a like, subscribe to the channel if you're just joining us for the first time, and also please do me a favor. Share this video with your friends and family, other traders and investors. It's really recommendations and word of mouth referrals like this that really help us grow our channel and our community. And we're targeting up to 100,000 subscribers, 100,000 strong by the end of this year. So help us get to that goal by sharing, doing your part. I would really appreciate that. So portfolio up a little bit over $6,000. This is the options trade for this week that I sent out in our Discord during Market Open live stream. I'm consistently updating everybody with where we are with the options portfolio. This is the wheel strategy that we are running every single week. And I sold options this morning. We're already up over 40%. Sent out alerts to everybody in the Discord. So if you want to get access to real-time updates, alerts, access to all the members-only videos, as well as our website access, link's going to be down below. There is a 16% annual discount that's available until the end of this month. So we'd love to have you on board. If you have any questions at all, please do reach out, and I'm more than happy to help. And we've got thousands of traders, investors with a lot of experience ready to help you in your investing and trading journeys. If you want to connect with like-minded individuals, grow your network, and also grow your net worth, join us in our Discord, and we'll be more than happy to help you here. So first things first, Magnificent 7 with a very nice rebound. NVIDIA up to $106, so up over 3.5% on the day. I think close to $90 billion is the overall gain for NVIDIA. Advanced Micro Devices also pushing higher, up almost 3%. Tesla with a decent rally, up to 2.6%, $216, back up to those levels. Amazon 175, also up 2%. Netflix was up to 675, up almost 1.5%. We had Microsoft, Meta pushing up over 1%, 90 basis points respectively. Apple more or less was flat. It was actually down for the most of the day, but then of course recovered as the event was going on for Apple. And overall, $160 billion added for Magnificent 7. Majority of that coming from NVIDIA, $90 billion. So that was the gain for NVIDIA on the day. And of course, Amazon also being up over 2.3%, up $41 billion. And Tesla, since it's a smaller market cap company, even though it was up more than Amazon on a market cap basis, only up 17.6 billion. And Microsoft was up almost 30 billion. Google was definitely one of the worst performers in the S&P 500 today. In fact, I think it was the worst performing stock in terms of its market cap, down almost $30 billion as the investigation begins with the Department of Justice. Now, this is coming off of the last week's brutal selling pressure. The first week of September, as we pointed out in our previous update, that was the biggest weekly sell-off since March of 2023, where we witnessed over $2.2 trillion getting wiped from the S&P 500. So the entire market cap of over $2 trillion just erased in the first week of September. So again, we're nowhere near close to getting back to that level yet, but we have seen about $550 billion recovered today. And the interesting thing is that only 29% of that came from technology. So what may seem like a technological rebound, you could make a case that, okay, tech was higher, NVIDIA pushing up, Tesla pushing higher. It really wasn't. I mean, $550 billion, and only a third of those gains came from the Mag 7. 70% came from rest of the market, other stocks actually seeing a lot of momentum and gains back higher. So this is once again showing us the broadening of this market and money that is actually going into equities, but other than Magnificent Seven or technology, it's actually going to other parts of the market, other sectors. And utilities continues to lead this market higher because that's one of the sectors that is up year to date. Now, I also wanted to break this down. This is actually one of our research analysis from our previous updates. And what this essentially shows us is going back as far as 51 years worth of data. So if you guys remember correctly, we did an analysis on the S&P 500 to better understand how much it's down from its all-time highs and how much time it has spent at that level. So going back as far as 51 years or 12,878 trading days, what we have identified is these thresholds for the market, which is a dip, a pullback, a correction, and a bear market and a crash. And you can see that the current reading for the market is that we are still well within a dip, meaning that we're well within 5% of all-time highs, where we have spent over 20 years, right? So in other words, 5,187 trading days for the market in the last 51 years. The S&P 500 has been well within 5% of its all-time highs. And the idea with this chart or this analysis is the lower we go down here, the lower we go down on these rows, the more rare it becomes for the S&P 500, meaning fewer the time you've spent at those levels. So the buying window is going to continue to be smaller and smaller the lower the markets get down to. So for example, on August 5th, we were down almost 10% from our all-time highs. So we were in a bit of a pullback, almost entering into a correction where it's pretty normal. The markets have spent majority of their times well within 10% of all-time highs. In other words, 56% of the times, markets are indeed well within 10% of their all-time highs. Now, the moment we dropped to over 10%, but well within 20%, now we're getting down to 78%. And over 20%, but less than 30%. In other words, when we are in a bear market, this is where we were back in 2022. And now you're looking at over 91.96% of the times, markets are well within 30% of their all-time highs. Said another way, or in a different way to help you better understand, if the markets were to be down over 30% from all-time highs, let's say that we're down 31%, and not 30%, we're down 31% from all-time highs, that's only really happened 8% of the times in the last 51 years. So in the last 51 years, only 8% of the times S&P 500 is down more than 30% from all-time highs. That just kind of, again, gives you a little bit of perspective of how rare these market sell-offs tend to be for S&P 500. So again, right now we're well within a dip, so we're still in this current situation. But the lower this sell-off gets down to, again, nobody really knows how low or how severe this sell-off is going to be or how long this sell-off is going to be. But just keep that in mind that the lower we get down to, the more rare it becomes, and the better the risk reward, the better the buying opportunities for us long-term investors. Now, coming over to individual sectors, as I mentioned earlier, utilities continues to lead the market. It's up over 21% on a year-to-date basis. Technology, as pointed out in my previous videos, is not even in the top 5. It's actually now not even in the top 7 or top 8. It's kind of crazy that it's all the way down here. It's actually being covered by my face. I have to go back a little bit. So there we go. XLK is really, really low. I mean, it's 1, 2, 3, 4, 5, 6, 7. It's at the 8th spot. Can you believe that? Can you believe technology is underperforming year to date so badly that it's only up 9.6%? In utilities, financials, we've got staples, we've got communication services. I guess you can make a case that that's Meta and comm services, so that's Google right there. But Google also is starting to underperform, which is one of the reasons why it's down on a weekly and on a monthly basis. Then we've got the healthcare sector, we've got industrials, and of course we've got real estate. So a lot of these defensive parts of the market are up double digits, right? So anywhere from 10 to as much as 16%. And financials are up almost 20%. And of course, utilities are up over 21% on the year. Technology continues to underperform, as well as discretionary, which includes your Amazon and your Teslas. And I think Tesla's underperforming this year. So if you come over to this, let's just quickly come over to Tesla for a quick look. Year to date, Tesla is indeed down over 13.5%. So that is indeed affecting discretionary sector. And Amazon might also be underperforming a little bit. 15.7%, so that is also not on par with the S&P or the NASDAQ, and of course certainly underperforming utilities and financials and even staples. So discretionary also, like it is literally at the 10th spot, 10th or the 11th spot right now. So tech, yes, definitely struggling at the moment. And I really wanted to go over where liquidity also went to today, other than Magnificent Seven. So of course, on a market cap basis, they can still lead. They will still lead because they're such large companies. So Nvidia, Amazon, Microsoft, top 3, Tesla well within top 5. But then other than these companies, Broadcom seeing a nice recovery back up. So it did, push up over 2.7%, gained about $637 million in the market cap. Then we had companies like JP Morgan, we had Visa, we had Meta Platforms, of course, Magnificent Seven, but then also ExxonMobil, MasterCard, Costco, Verizon, ServiceNow, Walmart, Bank of America. We had the Home Depot, we had Eli Lilly, Johnson & Johnson, AbbVie. So once again, you kind of get a little bit of a sense. It was financials, staples, healthcare. That's kind of like the profile of these companies that are pushing higher, leading the markets higher. And yes, Magnificent Seven and technology certainly seems to be getting affected. And the companies that were actually down on the day, so we had Nike, we had Oracle. I think Oracle after hours reported earnings. Oracle and Adobe were two big companies that were supposed to report earnings this week. And Oracle here after hours up another 9%. So it looks like it had a beat on both earnings and revenue. So revenue coming in about 13.3 billion, earnings a little bit over $1.39. So strong beats across the board, up almost 9%, but on the day it was down about 1.3%. And Adobe is reporting later this week. So if you come over to our MoneyVest platform, let's go over to earnings calendar. We've got Adobe for this week reporting on Thursday. So Thursday, 9/12, September 12th, $5.48 billion in revenue expectations with $4.62 in earnings per share. But coming back to these companies, so Oracle, United Health Group, we had Nike, we had CVS, we got Enphase Energy, one of the worst performers in the S&P 500, Procter & Gamble, we had Lululemon also, been selling off quite aggressively, Colgate, and then Bristol Myers, and pretty much Merck, and of course Google, one of the worst performers in the S&P 500, so definitely selling off very aggressively as well. So that's kind of like the profile of the stocks that are going higher versus lower. Google, of course, had its own reasons, which we'll discuss later in the video. But this is where the MoneyVest dashboard sits. MoneyVest index came down to 3.44 over the weekend. So last Friday, we were at 3.44. So this was flashing yellow. But since volatility has been crushed back down, it's now down to 19.46, back under 20. So the MoneyVest index pushed right back up. And again, more and more stocks back above their moving averages. So majority of stocks back above their 20 SMA. 64 and 68% of the stocks trading back above their 50 and 200 simple moving average, respectively, with the put call ratio sitting at 1.1. The contango level has definitely come down to now under 2%. So it's been one of the very important readings for us looking at the forward next 2 months futures contracts. And we're down about 3.5% from all-time highs. So again, well within a dip of 5% with the RSI at 46.57. So a little bit of a neutral for the S&P 500. So it's yellow to once again, few of them popping up to reds. So again, we're going to have to wait and see how the markets develop from these levels. The bulls certainly did win on the day today, but we are coming back up to that resistance that we're going to be testing later this week. So I want to be very clear in my messaging here in this video. I don't want anyone to get confused. The market's overall trend continues to look very weak, right? So last week was incredibly brutal. I mean, we did not have any buyers stepping in, no bids, nothing. This week, the start's been pretty solid. 1% gain on the day for the S&P, NASDAQ, Dow is decent, but we are nowhere near clear as of yet. We're not out of the woods yet. And, we're going to be seeing a little bit of a retest at those resistance levels, and that's really what's going to dictate whether the bulls can carry us forward with the breakout or if you get rejected, and if this ends up being a dead cat bounce or a bull trap, and then it's going to send us lower back again. So coming over to the technical dashboard, S&P 500, above 5921.50. NASDAQ also, below some of those short-term moving averages, only up above the 100 and the 200 SMA. And NASDAQ is only up above its 200 simple moving average. The Dow Jones, the best performer, it's up above the 921.50, 100, and 200. The only one it's down is going to be the 5 simple moving average. And then we had TLT and gold. You can see that once again, gold and the bond market doing incredibly well across the board. Green, meaning that they are pushing higher. They are, I think, hitting new all-time highs. Gold here, if you come over, we are now at over $2,500 an ounce once again. And TLT, I think, new 52-week highs Almost. So $100.10 was the high for the day, and 52-week high sits at $100.78. So across the board for both of these asset classes, bonds and gold, pushing higher. The dollar index is back above its 5 and its 9 SMA. XLU and staples, once again, should not come as a surprise. Those are the two sectors leading the S&P 500 and are also up across the board for all their moving averages. Technology struggling, communication services struggling, financials down on 5 and the 9, but everything else is up. Real estate doing really well. Energy, not so great because oil prices have been selling off. Morgan Stanley also downgraded their price target on Brent. Industrials has been a little bit back and forth. And then finally, discretionary also higher on the back of those moving averages. I just want to double check here. XLY here on the day pushing up 1.4%. It's really just been consolidating sideways for the most part though. Now coming over to Magnificent 7, Google is the only stock that I really want you to focus on. It's performing the worst, as well as Microsoft. So I guess there's two of them that are really just lacking momentum overall. Tesla, Amazon, some of the best short-term performing stocks right now. Apple's been a little bit more back and forth, and Nvidia, as we already know, has also been selling off down over 20% from its all-time highs, although starting to pick right back up here on the day. So we'll see if that continues throughout the week or not. And then, of course, Meta here, it's been rolling over from that resistance. It's just been below its 5,921 SMA, so short-term trend still a little bit more weak and sideways, but the long-term trend is still very much intact. So Palantir soaring over 14% on the inclusion of the S&P 500. I did a video on Palantir, so make sure that you do check that out. I think we were expecting about a 7 to 10% rally on the day anyway. So again, you can tag on another 4% on the back of this momentum and overall euphoria and hype around Palantir stocks. So very, very nice gain. I think trading back up to over $34 per share. Now, this is the big news for the day. This is the big catalyst. Google aimed to control web ad tech, U.S. prosecutor says as trial begins. This is happening in Alexandria, Virginia, and on Monday, basically the prosecutor said that Google has largely dominated the technological infrastructure that funds the flow of news and communication on websites through more than 150,000 online ad sales every second. And Google's sought to dominate all sides of online advertising technology by controlling competitors and customers. The Justice Department prosecutor said as trial began in the tech titan's latest antitrust showdown. And Google used classic monopoly building tactics of eliminating competitors through acquisitions, locking customers into using its products, and controlling how transactions occurred in the online ad market. This was Julia Tarver-Wood, an attorney with the DOJ Antitrust Division, said in the opening statement. And Google is not here because they are big. They are here because they use that size to crush the competition. So I think we're going to be hearing a lot about this overall investigation and the Department of Justice investigation and the overall suit. So just brace yourselves. We'll see what comes out on the other side. Whether indeed Google is going to see some vulnerability to breakups or not. I think it's really going to be quite an interesting one. We've seen this before. So in the past, I think, of course, none of this has taken place. The problem also with this is, and the reason why this is becoming a bit of a problem is because the companies are becoming larger and larger by the day, right? I mean, we're talking about Magnificent 7 here. They're like 30%, 35% of the entire S&P 500 index. So we're talking multiple trillions of dollars, 15 trillion total for Magnificent 7. But it's also going to set a little bit of a precedent if this actually were to go through. I mean, then Microsoft and Amazon and Apple and Meta and a lot of these companies are going to be susceptible or vulnerable to potential breakups with antitrust and monopolistic practices. So really, it's kind of like you're opening a can of worms here by targeting Google. And if anything were to happen to a company, it's going to set the precedent where all the other companies could be vulnerable. And I think that could send the message that, if any company, for example, Apple with their App Store or Amazon with their advertising or Meta with their acquisitions of, WhatsApp and Instagram and all these different companies, I mean, really any company would be vulnerable to these types of investigations. So we'll talk more about this. I think it deserves a little bit of a more of a detailed video. I have a very small position on Google right now. I'm planning on selling more puts on Google in the low 100s. We'll see. We'll see how low that it drops down to. But for now, that's all I've got. U.S. District Judge Leon Brinkema is hearing the case without a jury and will issue a ruling after a multi-week trial concludes. And the Justice Department and a coalition of states based their case on quote-unquote ancient history from a time when Google was still working on making its tools able to connect to competitors, is what Google's lead attorney, Karen Dunn, essentially mentioned in her opening remarks. Now, tomorrow, we've got a big debate. Vice President Kamala Harris and former President Donald Trump are set to face off in their first debate tomorrow. I'm kind of excited to hear about what that debate's going to bring in terms of insight and, what the policies are going to be set forth for, from an economic standpoint, political standpoint, everything, the whole 9 yards. So I'm going to be watching that tomorrow. So just wanted to put that on your radar because it's a huge catalyst for the markets, I'm sure. Morgan Stanley cuts oil forecasts, saying traders are pricing in a demand slowdown similar to a mild recession. So they're also cutting their price target, also expecting a bit of a mild recession for the U.S., with Brent expected to come down to, I believe, $69 per barrel. I think a little bit lower. But right now it's trading at around, come over to crude oil, trading at 68.76. I think their price target was in the low 60s moving forward. So this right here, Wednesday, September 11th, is when the big report's going to be coming out. CPI and core CPI. I will be live to cover those numbers, but 0.2% month over month and 2.6% year over year is that forecast for CPI, for core inflation, and headline inflation and PPI numbers also scheduled. And also, I want to keep in mind, and I also want to help you understand that the sensitivity to a lot of these events is becoming more and more problematic, because in the past, you'll notice that in 2022, you'll notice that the volatility rose as we got a lot of economic data points. And I think that is also increasing once again, meaning that the economic data points are becoming more important for the market. In other words, the market's sensitivity to these economic data points is increasing once again. So any type of report that we get, whether it's CPI, whether it's non-farm payrolls or whether it's the FOMC, the markets are putting a lot of weight on these binary events, and that can create more volatility going into already a very, very seasonal time for the market. So Janet Yellen, Treasury Secretary, also said the U.S. economy remains solid on path to a quote-unquote soft landing with no meaningful layoffs. I would take that with a grain of salt, of course, Treasury Secretary. She said that many times in the past, and I would take that with a grain of salt here, because I don't really trust that the economy is strong, considering there's been a lot of indicators suggesting for weakness in the overall economy here. Now, this right here was also a very interesting chart. The value of global stocks and bonds, and the total value of global stocks and bonds just hit $255 trillion in July, a new all-time high. Compared to 2008, the total value of global stocks and bonds are now 2.5 times higher. So at the time, we were like roughly around $100 trillion, and now we're sitting at well over $255 trillion. An increase, interestingly, the world debt securities are worth $130 trillion, whereas equities are $125 trillion. So basically the bond market $130 trillion, whereas global equities $125 trillion. Over the last 14 years, global stocks have quadrupled in value while bonds have doubled. To put this into perspective, these markets reflect 233% of global GDPs and the third largest on record, and only below 2020 and 2021. So all-time highs are everywhere as the overall portfolio values, asset prices continue to surge at record levels, and now sitting at over a quarter of, 255 trillion. I don't even know what a 1,000 trillion is. So 255 trillion, 25% of 1,000 trillion dollars for stocks and bonds. So coming over to the markets now, I really want to highlight some very, very important levels. A lot of these things we've already discussed. One more thing I would point to is the idea of gold. I think gold has a ton of potential, continues to go very much underappreciated. In my opinion, it started really a nice little rally here on the back of recession fears, elevated fears around economic contractions and weakness. And again, if there's any type of potential crises, I think gold is, in my opinion, where one can diversify and allocate into. That's what I've been buying over the last couple of years, and I will continue to actually buy physical gold. I'm already up on my physical gold, 2025, as much as 30%, but I will continue to dollar cost average and buy more gold bars and biscuits and coins, whatever I can get my hands on over the next several months and years here, because I do believe that long term it's a very liquid asset that you can hold value in. It's a way of diversifying your portfolio as well. Now, when it comes to interest rate cuts, they are getting more and more aggressive. Markets are expecting for rates to come down from 5.2 to as much as 4.16% by the end of 2024, and then accelerate down to 2.82 by the end of 2025 here. And US job openings have also been coming down. So when it comes to the labor market, we talked about how we hit a high over 12 million job openings, and that has now come down to 7.6 million job openings. Again, fewest since January of 2021. And as a result, the ratio, which is the job openings versus unemployed persons, has also normalized, right? So we've talked about this on our unemployment spreadsheet, and it's now sitting at 1.07. At one point, you'll notice that we were, of course, much higher at the peak, 12 million job openings, and I believe less than 7, closer to 6 million unemployed persons. So this ratio, of course, was at well over 2.5 or 2, and it's now really just diminished all the way down to pretty much close to 1, right? That is the tightening effect of interest rates and how there's job openings relative to unemployed persons getting squeezed. And the last time you'll notice that happened over here, that crossover where we had more people unemployed versus job openings, well, eventually what happened was, of course, the economy blew up and we saw a very, very sharp recession. Although you can also make a case that over here, we witnessed a recession, but that was not the case. So I would take that, again, not as a perfect indicator, but something that was the Fed's target, right? From the beginning, the Federal Reserve wanted to squeeze this number down to as close to 1 as possible to bring it down to equilibrium, and now we're already there. But at the same time, unemployment, very, very important indicator for the strength of the overall economy. Uninversion of the yield curve, September seasonality, probability is really low, 44% for the markets to be higher in September. The first week of the month of September down 4%, comparable to the last 4 years. And then finally, this is Nvidia's daily market cap change and how that has been well in the $250 billion and how that's also been affecting the overall markets as well, S&P 500 and the NASDAQ. Now coming over to the markets here, starting with SPX. What we have here is the 30-minute time frame, and you'll notice that we kind of bounced off of that 5,400 level, so that 5,399 or close to 5,400 level, very, very important level of support that we have talked about in our previous updates. Next resistance and target is going to be 55.65. So this right here is going to be that level to keep in mind for S&P 500, as we have already discussed. Obviously we broke down below that level. It was a big test for the bulls, was not able to hold up at those levels anymore. Came down 5,400, nice little bounce back up, and right now we're well within that range for S&P 500. So what I really want to address in this video is that we are not out of the woods yet. We're not done from the selling pressure. I mean, today could very much be a little bit of a technical rebound, a bull trap setup for the markets. So it's not until we break back above 55.65, right? So it's not until we break out above this level where I would be confident that, okay, there's possibility for us to pretty much trade back up to all-time highs. Until then, I think this is the range where we need to really watch. Got a big resistance, like I said, at here, 55.65, and a strong support at 5,400 for S&P 500. Now, coming over to QQQs, this is also something that we discussed. Very nice support here at 445, 446, and a little bit of resistance right over there. And QQQs on the day getting rejected at those levels once, twice, 3 times. Pretty much closed above that level, and after hours also up another 21 basis points, pushing back up to 455. So nice little move back up for QQQs, and the next target is going to be 468. However, I would still like to point out to the idea that we are very weak and we are still making some lower highs. So you can see that boom, lower high, lower high, lower high, and lower low, and lower low. So we're still very, very much well within a downtrend for QQQs as well. So really the target that I'm watching for us to break out further is going to be 464 on the 30-minute time frame. That's another level that we need to break out of in order for us to successfully break past the previous high and also feel a little bit more confident on this overall shift in the pattern and a little bit of a trend reversal for the NASDAQ. Now coming over to Apple stock, and Apple here after hours slightly higher, but of course perfect validation of that support right at these levels, sitting roughly at around $217. Resistance all the way up to $236. A lot of consolidation sideways for Apple. So we've already marked out some very, very important levels to keep in mind for Apple. Talking about Amazon, a lot of consolidation sideways. Support level is going to stay put at 173. Resistance all the way up to $181. And as we have discussed, it's been pretty much trading sideways for a really long time. Amazon might also be another stock for us to look into for trading options and running the wheel, considering how much it's been trading sideways. Really, for options trading, I think the best thing is for the stock to either go up or trade sideways. That ends up being one of the best sort of environments for trading options and for selling options and trading the wheel. So for Amazon, 173 support, resistance 181. Coming over to Tesla, decent day, pushing up over 2.6%. We already know you have a big resistance at 225 with a decent support sitting roughly at $208, $209 for Tesla. Coming over to Nvidia now, and Nvidia here pushing up over 3.5%, up another 0.5% after hours, so back up to $107. And after the brutal selling pressure from last week, it's pretty common, it's pretty normal for us to expect a little bit of rebound for Nvidia. So far on the week, it's up over 3.5%. So we'll continue to monitor this stock and how it trades. And support level is going to stay at $96, resistance back up to as much as $117 per share for Nvidia moving forward. Talking a little bit about advanced micro devices, and AMD here also selling off. Lower highs right now starting to make a little bit of a higher low, so that's good. Support level is going to stay put down to as low as $132 to as much as $122 per share, with a resistance all the way up to as much as $142 for advanced micro devices. Talking a little bit about PayPal now, and PayPal has been outperforming the markets for quite some time, although now starting to roll over back under $70, trading right at support. So this right here is going to be that area of demand for PayPal. This should not come as a surprise considering how overbought we really were. So RSI, MACD, everything was just trading at extremely overbought levels. And right now we're coming back down to that support at $68 a share. Resistance all the way up to $76, $77 for PayPal. Coming over to Visa, same thing. Very, very nice breakout to the upside. Huge momentum coming in over 2.2%, although getting up to very, very overbought levels here. Support level is now going to stay up at 282 with the next resistance and target pretty much at all-time highs at $290 a share. Visa's actually done really well from those lows, up over 12, almost 13% at the moment. Coming over to Meta Platforms, and Meta here continues to consolidate sideways, up almost 1% on the day. Resistance and huge area of supply sitting at $540. Support level is going to stay put down to $480, down to $458, down to as low as $420 per share for Meta Platforms. Again, a lot of consolidation, and Meta is also going to be one of those companies that I do end up trading options on and trading the wheel on Netflix, on Meta as well. Netflix support level is sitting roughly at $660, resistance all the way up to $698, closer to $700. Still well within the context of this higher high and higher low pattern, so very nice uptrend for Netflix. And support level, like I said, $659 down to as low as $615 for Netflix. Coming over to the bigger sell-off here, Google down 1.7, sub 150. And right now it's trading down to an area of support. I feel like the put premiums are actually going to be very, very solid for Google. So we'll be looking at this stock for selling puts for the next week. And the next target or support for Google is going to be setting down to $129 a share for this company. Coming over to Microsoft, and Microsoft here also well within the context of a head and shoulders. It's now fully formed. It's just a matter of time whether we get a breakdown or not. And this right here is going to be that support level and that neckline inside this green rectangle, sitting roughly at $397, close to $400 per share for Microsoft. And finally, we come over to Enphase and Costco. And Enphase here with a pretty brutal sell-off, down over 5%. Enphase is also going to be a pretty decent stock for selling puts on, because if you come over to our Webull and ENPH, and if you come over to put premiums for, let's say, the next week, we're looking at pretty decent $297 for $100. That's just 11 days out. And $249, $228, $1.58. Those are actually pretty solid premiums. I might actually end up selling, puts on Enphase. $85, $80. It's like 35 cents, 67 cents, and Delta is pretty low as well. So those are going to be potential options for me to sell puts on Enphase. So we'll decide what the trade ends up being for next week. Again, if you want to get access, links going to be down below. We'd love to have you on board. And Costco here, pushing higher on the day, up over 2.2%. Again, getting a lot of market cap inflows as a staple stock breaking out of this resistance. We got pretty much the all-time highs sitting at $918, $919 for Costco. And finally, coming over to volatility, down a little bit over 13%, back under 20. And if the VIX continues to slide lower, markets are going to keep pushing higher because of that negative correlation. But if we do get a VIX spike, once again, just be ready with that cash, be ready to deploy and buy into the markets when the deals present themselves, when the risk reward is going to be really, really good. So hope you all enjoyed this video, found it helpful. Make sure you drop a like and subscribe to the channel. Again, links to our Discord and Patreon is going to be down below. We'd love to have you on board. If you have any questions, feel free to let me know. As always, happy investing. I'll see you all in the next video.